Well, good morning. I have the pleasure of interviewing Karim El Sohl, who is the Chief Executive of Gulf Capital. Well, this is an amazing morning. We just heard that Karim has closed a fund of amazing amount. Can you tell us a little bit about it? It's unbelievable.
Yes, good morning, Dori. We wanted to raise our third private equity fund and raise $550 million. And we went on a global fundraising, and the region is growing very fast, and our track record is becoming stronger and stronger. So we were able actually to raise at a faster pace, and we hit the hard cap, and we ended up raising $750 million.
That is absolutely amazing. Congratulations again. And I also heard this morning you were talking about the fact that quite a large percentage of this 750 million came from outside the region, which again I think is another really amazing story. Can you expand on that?
Sure. If you take out the Gulf Capital contribution to the fund, 60% of the external money raised came from abroad, mainly Asia, Europe, and the US. Around 50% sovereign wealth funds, pension funds, and the rest are endowments and financial institutions. So we're very gratified by the global backing we got and the caliber of the LPs. It's 100% institutionals of the highest calibers. And I think global LPs are starting to take note about the growth in the Gulf, the potential, and the kind of returns they can make. And they're willing now to allocate private equity investments into the Gulf.
And why do you think that would be? I mean, maybe you could give us a little bit of a background about Gulf Capital. And I mean, I'm sure institutions would have done all their ticking of the boxes and making sure that, you know, this is a good company, a good fund to invest in. So can you give me a case study or something to give me a little bit of a background of why all these people plowed in with all that money?
Well, we're very focused on control growth buyouts. The overwhelming majority of our deals have been controlled stakes, investment transactions they're familiar with. We're very focused on operational improvement. How do we add value to our portfolio companies? How do you attract the best management, align interests with them, and then how do you finance and grow them, and eventually create exits? And we've done a number of such exits, like the very successful IPO of Gulf Marine Services on the London Stock Exchange, which was a great exit for us. We increased EBITDA by 11 times.
Wow.
And at the IPO, we actually single investment return all of our fund too. So
wonderful.
So it was a very profitable transaction, but more importantly, we're able to add value and show global LPs we can make a difference of portfolio companies. And most importantly, we're able to do exits and return capital.
So maybe you could give me another case study of your actual improvement of the management. I mean, do you actually get involved? Because obviously the story in all PE firms is now we've got to get involved. We've got to put a lot more management skill into the operational companies, portfolio companies. So is that what you do here as well? And how easy is it to find the right people?
I think the single most important decision we can make is backing the right management team. Often companies we buy into have strong management, but sometimes we have to supplement or surround them with more skill sets or bring in new leadership. But also what we do very well is on every board we have finance partners and operating partners guiding management. And lately increasingly we're bringing executive chairmen from industry who've done it bigger, better, perhaps on a global basis to guide our management, essentially.
That's fantastic. And what do you think about the future? I mean, do you think a lot of new funds are going to suddenly come after the backing of, oh my God, these guys raised so much money, so there must be so much money coming back into the region? Or what is your sort of estimate about where it's going to all go next year and the year after?
Well, the region in 2005 through 2009 launched over 130 private equity funds. That was a bit too much, and very few of them we graduated to second or third fund. So there was a natural shake-up and a consolidation. Now the number of active players, you count them on maybe two hands. More interest will come, but we went through a consolidation, and I think we're at the right level right now. There's not too much capital chasing few deals as you saw in 2006.
Okay, and are you going to get a lot of competition from what I call non-local PE firms?
It's funny, the last year, every time you open the press, you see the big global buyout funds bidding on multi-billion-dollar assets here. That's new. They're here. They're starting to take note. They're also able to deploy bigger equity checks, which is what they want. But for us, that's actually a welcome news. We're a mid-market firm. We invest checks of 50 to say 150 million dollars, and we sell to firms who need to deploy 300 to 500 million dollars equity checks per transaction. So it's an additional form of exit. So it's not only IPOs and trade sales we look at. Now we are able to look at financial sales to third-party private equity firms.
Wonderful. Well, thank you very much indeed, Karim. That was wonderful, and I wish you all the very best with this magnificent performance.
Thank you for having me.